Microsoft ultimately did because of significant investments and they made in OpenAI in 2019, 2020. They're really starting to build towards this breakout year in 2023. And I think Microsoft's impact, and I would put them at the top of the class in 23 as a Mag 7, even though their performance was actually at the bottom of the class, up 56% year to date. That was right along with what Apple was at. The NASDAQ was up 44%. And I do believe that Microsoft did more to advance AI this year. And just outside of the investments that they've made in OpenAI over the past few years, in 2023, we saw them aggressively implement features of OpenAI and ChatGPT into Copilot. That was a remarkable speed. I thought it would take them 3 to 5 years to do it, and they're doing it in about 6 months. Separately, what they've accomplished in cloud in 2023, they grew their cloud business faster than any other major hyperscaler, even though they are the second largest one. That's a hard accomplishment. And last is, as in your setup segment, what they did to stand by OpenAI. OpenAI is going to be one of the 2 or 3 top foundation models. That is, think of those as the building blocks that AI is going to be built from in the next decade. And the fact that they stood by Sam Altman when there was controversy, there wasn't a lot of clarity when things were moving fast, and ultimately saved the company, I think is another significant contribution. So when you put Microsoft's body of work together in 2023, it justifies it being at the top of the class, even though NVIDIA shares significantly outperformed. Microsoft did more to advance AI in 2023.
Where do you think Microsoft will be in the class next year? And if it's not at the top, who will be?
So I think next year we're going to see a little bit of a shift in the top. I think we're going to see a fracturing of the Magnificent Seven. And at the top of the class, I think it's going to be Google. Google this year has had a relatively modest impact on AI. Their advancements within their foundational models have been criticized. And up until a couple weeks ago, when they demoed some of the features and features around their new Gemini model, there was a lot of skepticism whether they're going to participate. My sense is that Google is going to make the most progress in 2024 related to AI, and I think that that is going to really power them to the top, not only with what they're going to show with some of the features, these highly anticipated, more multimodal, different ways you can interact with chatbots, not just through text, but through voice and images. I think advancing that, but also in how they're implementing AI into search. And that, of course, is the big negative related to Google, is this belief that their high search market share will be challenged as more generative AI is used as an alternative to search. I think that they're going to tell a different story or show a different story in 2023. So I think they're going to be at the top of the class, and just in terms of stock performance. And at the second, number 2, if I may, I think it's going to be Apple. And in part because Apple hasn't said anything about AI. Literally, they have not mentioned AI or machine learning proactively on their earnings calls for the entire year. Obviously, it's come up in the Q&A, but Apple has a big opportunity in 2024 to tell more about what they're doing, and they are doing a lot in generative AI. They're actually working on a foundation model. That's one of those, there'd be 4 or 5 of them in the world. It's codenamed Ajax, but that is an opportunity for Apple to talk more about Ajax this year and ultimately allow all the billion-plus monthly active device users, or 2 billion plus, for them to use more generative AI. So I think Apple's going to be a big winner in 2024 when it comes to AI.
That's very interesting, Gene. I want to take that point forward, because what does that AI R&D investment mean for Apple's stock price, which sneakily has gone past $3 trillion at a time when many were wondering, there's slack in demand, services is not doing well, the outlook is not that optimistic?
So the stock has been moving higher despite the reality that the business hasn't grown for the past year. It will grow on a like-for-like basis by about 5% in their December quarter, so they should break that trend. But the stock has gone up in part because of this flight to quality. It's in part because investors broadly see, yes, the iPhone may be light this year, but they'll pick up it next year. You know, 1 year's pain is the next year's gain type of a mentality. It has not been going up because of artificial intelligence, because they haven't really said much of it. And it hasn't been going up because of Vision Pro, because most investors are skeptical of what Vision Pro can do. And so the question, when it comes down to you're getting into a big market cap here with $3 trillion. Of course, it was big at 2 and 1 trillion as well. All those were hard numbers to fathom. And I think what is most important for investors is just to simply look at what is their earnings growth potential, and then what multiple do you put on it. And I believe Apple can grow earnings year in, year out close to 10% based on all the factors. Probably revenue at 5%, but earnings at 10%. And I think that ultimately justifies a 30, 35 multiple, given there is some also optionality about that growth rate, both revenue and earnings stepping up, whether it be from Vision Pro or whether it be from automotive or something in health. Pretty rare to find a company that is a staple in our lives that has this optionality to have a step function. Clorox, Procter & Gamble, Coca-Cola, they're not going to have that kind of step function opportunity that Apple has. And I think when you put that all together, you can build a strong case for Apple to be a $4 trillion stock.
Ooh, $4 trillion by when? Because, you know, these stocks have defied gravity in the way they've moved.
Yes. I think over the next, I'll say 1 to 3 years. I mean, that's a pretty wide time frame. But what I want to get across is that I think that there is upside, and the timing of whether it hits in 1 to 3 years. I understand there's a large difference in terms of the annual return, but I think that it's just timing to me is less important. What's more important is this company's very well positioned. And again, this AI opportunity, I talked about the opportunity, Vision Pro or automotive, the opportunity with AI isn't part of this either. They can do a lot when it comes to basically personalized AI, because they're brand around security. And they can create new products around that as well. Imagine asking Siri, for example, book me and my family a trip to our favorite city in the best weekend that works for everybody in the family this next year, and it just being taken care of. It sounds like a fairy tale, but that's what they're working to, and I think that's going to unlock value.
I so want that. I'll be the first in line, Jean. Really quickly, some people have told us that, you know, a lot of the really good news, you know, great earnings for next year, maybe even 2025, maybe even 2026 have been built into some of these stock price gains. Would you agree with that, or do you think that as a whole, AI as a theme really still has somewhere to run?
We haven't even started with when it comes to AI and the opportunity, and we believe that we're going to have a 3 to 5 year bull market when it comes to these tech companies, not just the Mag 7, but I think a lot of the other sub $100 billion companies. I think maybe said a different way, I think we're in 1995, and there's a huge run that's going to come up over the next 3 to 5 years. There's going to be all the goodness with an AI bubble that's going to come, and there'll be all the caution, and because eventually the bubble will burst. But I think we are in a place right now where, at least at Deepwater, our money's on that this is going to go much higher.